For more reaction to Tesla's delivery numbers and the road ahead, let's bring in Tim Higgins. He's business columnist at the Wall Street Journal, also a CNBC contributor and author of Power Play, Tesla, Elon Musk, and the Bet of the Century. Also with us, George Gianarikas is an analyst at Canaccord Genuity. George, these numbers, delivery numbers, are better than you expected. Looks like some of those big inventory numbers are being worked down here, but there's still questions about demand and supply from the Chinese makers out there. So what keeps this stock moving in this positive direction?
Well, thanks for having me on. And we think the really important metric from a stock perspective is to watch year-over-year growth trends. If our numbers are right over the next couple of quarters and next couple of years, the year-over-year growth in earnings and non-GAAP earnings and revenue likely bottomed in the first quarter. And if you pay attention to what the stock's done, it probably bottomed in the first quarter. And what gives us a little bit of conviction that they probably will hit that 1.8 number and likely grow into next year is that they've promised to release new vehicles. We don't know what they'll look like towards the end of this year and into early next year. So that gives us some confidence and hope that they can continue that growth trajectory over the next several quarters.
Tesla recently reported strong Q2 deliveries, proving that the reports of the demise of EV sales appear to have been exaggerated. After the EV leader reported its deliveries, Tesla stock led the S&P 500 gainers for the second straight day. And as of the time of this video, the stock is up more than 10%. But this wasn't the end of the good news for Tesla investors. In today's video, we're going to go over some news that definitely contributed to the Tesla stock surge, as well as some bullish analyst opinions that will show you why Tesla stock remains a strong buy even after this surge. But before we get into today's video, if you want to keep up with Tesla's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
And Keith, I should mention as well, you're still bullish on Tesla, thinking this could be a $300 stock next year.
Yes, I am. I think this stock is going to double or triple, maybe even more in the next few years. And again, we're early innings. Anybody who's thinking about this just in terms of cars is very smart, but I would encourage them to broaden their horizons significantly. This is about power. This is about robotics. I think it perhaps is the best undervalued AI play on the planet right now. And love him or hate him, Musk knows what he's doing.
All right. Keith, thank you. We appreciate it. Always fun to check in. Keith Fitzgerald.
Thank you.
In Q2, Tesla delivered nearly 444,000 EVs, and this was extremely welcome news for investors who had been reducing expectations throughout the period, resulting in a consensus estimate of 439,000 units, according to FactSet. Still, the reported figure was almost 5% lower than that of the same period 1 year ago, but there were some positive facets of the report that investors may be focused on. For instance, in addition to beating delivery estimates, Q2 featured a drawdown in inventories as deliveries outpaced the 41,831 EVs Tesla produced. A buildup of inventories due to lower perceived demand was a fear that helped drive Tesla's share price down earlier this year, but the stock has now rebounded with a nearly 30% gain over just the last month. The good news from today's report didn't end there either. In fact, the company also noted a record 9.4 gigawatt-hours of energy storage products deployed in the quarter, and that's more than double the previous record of 4.1 gigawatt-hours reported in the first quarter, highlighting Tesla's energy business' impressive success. There's been a surge in interest in energy storage products to smooth out power supply as renewable energy sources are installed for applications, including growing data center construction. This is extremely bullish for Tesla, as the global data center market is expected to increase to a valuation of $622 billion by 2030, from $301 billion in 2023. So, that surge in deployments bodes well for yet another source of revenue for the company. Investors will look for even more updates from the company when it reports its Q2 earnings on July 23rd and provides an update on its self-driving tech and robo-taxis on August 8th. But what are Wall Street analysts saying about Tesla stock? And is now the time to buy? Let's dive right into it. Hello, everyone, and welcome back to Investocracy.
Phil, what would you add to that? What would be the next important data point to watch?
Well, it's the robotaxi. I mean, this is the one that everybody is keying in on because people want to know if there is truly going to be the level of detail that will give them confidence to say, you know what, this strategy makes sense. On paper, what Elon Musk has said, whether you go back to the last earnings call or previously, on paper, it makes 100% sense in terms of what he wants to do. But the reality is getting robotaxi up and running and truly having an impact in terms of saying, okay, we have a fleet out there and it's X 100,000 or, you know, however many vehicles and seeing some trajectory. That's what people want to see. So August 8th is really what people are focusing on, Kelly, because if it's another case of, well, we think we're going to be able to get this, but we don't have a whole lot of specificity, I think it's going to be a disappointment.
Right, exactly. But George, for you, how important is that as well when a lot of people would say robotaxi is a wonderful long-term aspiration, and yet in the near term, how tangible is it?
Look, it's an incredibly important date, like Phil alluded to. We'll see what exactly they talk about their long-term business model. But one key metric that we're focused on when they report earnings is FSD, full self-driving take rates. They lowered the price of it significantly during the quarter. They gave a free 1-month trial. And to the extent people believe in autonomy, which we do, it'll be really important to see how many people opted in and bought that software this quarter. That is the key to the near-term story, in our opinion.
Following Tesla's report, CFRA analyst Garrett Nelson raised his 12-month price target on Tesla stock to $250 from $230. And this implies an upside of 8.10% from where the stock is currently trading. He also said that the report greatly eases concerns regarding softening EV demand. Nelson rates shares at buy, as does Wedbush analyst Dan Ives, whose price target is $275 a share, which implies an upside of nearly 19%. Ives said that in a nutshell, the worst is in the rearview mirror for Tesla, as he believes that the EV demand story is starting to return to the disruptive tech stalwart ahead of a historical robotaxi day. Also, Canaccord Genuity showed confidence in Tesla, raising its stock price target to $254 from $222, while maintaining a buy rating on the stock. This firm's optimism is partly due to the potential of Tesla's FSD software, which has recently been offered to customers through a 1-month free trial and at reduced prices. The analysts also highlighted the upcoming earnings report set for July 23rd as a significant event, which is expected to provide insights into Tesla's margin results, possible new vehicle announcements, and energy storage updates. But their focal point of interest is the customer adoption rate of Tesla's FSD feature. The firm is eager to learn about the current customer traction, especially considering Tesla's strong emphasis on autonomy and the forthcoming robotaxi day, which could reveal more about the company's direction and the feature's impact on margins. With all of this in mind, is Tesla stock a buy now? Let's find out. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
I haven't, looked into the detail in a long time, Ed. And of course, you cover this company very closely. But to me, it was surprising that almost all of the vehicles they sold were Model 3 and Model Y. Do they not even sell the S and the X anymore? I mean, it looks like, what, 20,000 of those more expensive models, and the other 420,000 were 3 and Y?
Yeah, I mean, Elon Musk and other Tesla executives have been honest that they largely still make the S and X for sentimental reasons. It is not a volume product. You know, the plaid version, the rethink that they did in the latest generation, it's an expensive and premium product. And there's equal surprise when those less familiar with Tesla also hear the Model Y is technically the best-selling vehicle model in the world.
In the world. That bears repeating, Ed, because I did not know that, and I look at cars all the time. So is it, I mean, I would expect the Toyota Camry, the Ford F-150, like the Honda Civic. The Model Y outsells all of those other single models.
It does, and those other examples you noted, well, I would say with Model Y is its uniformity across different geographies. It sells well in the United States, China, and in continental Europe as it stands, where, you know, as you know from experience, there's a bias towards smaller form factor vehicles. I'd also say let's look at what's happening in the China market specifically, because we also got data from China's Passenger Car Association, which showed in the month of June, not the full second quarter, but June, a pretty significant drop in output from the Shanghai factory and also deliveries domestically. And so Tesla is not doing so well in China at this moment in time, but those domestic players, NIO, Li Auto, etc., they're pushing new records. BYD, of course, did very well. And one of those factors that Elon Musk talked about, apart from domestic competition in China, is this admission that Tesla is now directly competing with hybrids, that consumers, when faced with a choice right now in different markets, are opting for hybrids, which I find is really interesting because we've changed our psychology about EV buying in the market completely from, say, a year ago.
It's important to note that Canaccord's non-GAAP EPS estimate for 2026 has been adjusted from $8.55 to $9.06, and the new price target reflects a change in the earnings multiple from approximately 26 times to 28 times the firm's 2026 estimated non-GAAP EPS. The firm's increased estimates are driven by higher expectations for Tesla's energy storage growth and margins, and signify Canaccord Genuity's confidence in Tesla's growth potential and emerging opportunities. Investors should be bullish on Tesla stock for these same reasons. As we all know, Tesla is striving to become more than just an EV company, and one of its key efforts right now is building out autonomous vehicles and eventually launching a robo-taxi business. In addition to autonomous vehicles, Tesla is also in the midst of getting its humanoid robot, Optimus, ready for market launch, which is anticipated to happen in 2025. While these endeavors are not ready for the mass market just yet, Tesla has made great progress. For example, Optimus is already being used in Tesla factories, showcasing its potential to enhance efficiency and reduce labor costs across all kinds of industries. Tesla bears and Musk critics will point out that the Tesla CEO often shoots himself in the foot when it comes to deadlines, but it's difficult to contend with Tesla's ability to eventually follow through. In fact, we can say that if Tesla can replicate similar levels of success in its robo-taxis and Optimus as it has with its EVs, it could transform the company and maybe even society for the better. Tesla has massive opportunities in these spaces, as the total addressable market for humanoid robots is projected to reach $38 billion by 2035, up more than sixfold from a previous projection of $6 billion, according to Goldman Sachs research analyst Jacqueline Du. Additionally, ARK Invest's Cathie Wood thinks that the robo-taxi opportunity globally will deliver $8 trillion to $10 trillion in revenue by 2030, and sees it as one of the most important investment opportunities of our lifetimes. Combined, and if accurate, the two new revenue sources would more than skyrocket Tesla's current revenue. This is why we believe that Tesla's best days remain ahead, and that it isn't too late to invest in one of the most transformative companies of the future. Tesla's ability to innovate and push the boundaries of technology has been a key driver of its success so far, and if it can continue to lead in the EV market while successfully expanding into new areas like autonomous vehicles and robotics, the company could soar to even greater heights. But what do you think about Tesla's stock? Is it a buy at the current price? Let us know your thoughts in the comment section, and don't forget to tell us what your valuation for Tesla is. If you would like to know what companies like Tesla have been up to these past few days, go ahead and click on the next video on your screen. See you there.